Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda. Asian shares jump at the start of a big week for big tech earnings, with investors also watching for rate decisions from the Fed, the Bank of Japan and the Bank of England. Meanwhile, Israel attacks Hezbollah targets and threatens more retaliation for a rocket strike over the weekend, while signalling openness to a truce with Hamas in Gaza. And AI delay. Bloomberg has learned that Apple's new artificial intelligence features won't make it in time for the next iPhone and iPad software updates. Well, good morning. Well, a very good morning. We got beginning the show with breaking earnings from Philips this morning, the Dutch maker of medical gear, of course. Results for the second quarter. We're seeing adjusted EBIT for the second quarter at €495 million. So actually a big beat on the estimate of €426 million there. You're seeing comparable order intake up 9% in the second quarter, and sales also beating estimates, but only slightly there. Here we have a hot headline crossing the terminal. Adjusted EBITDA for the second quarter coming in at €495 million. So there we are, a big beat on the estimate. This is interesting to see because the context really is that the shares are up 16% year to date, but they're still down 45% since they issued that sleep apnea recall in June 2021. This is the first set of results since the settlement on US claims linked to those faulty devices. We're going to speak to Roy Jakobs, the CEO of Philips, later in the programme, and we'll delve into all of those results. Also, just crossing the terminal, we have results from Heineken, the Dutch beer producer. Analysts had been expecting a confident set of results. They say that they see full-year operating profit growth in a range of 4% to 8%. So a narrowing of the guidance there. You're also seeing Heineken taking an impairment charge of €874 million. They see first half organic beer volumes at a growth rate of 2.1%. So actually a lower rate than the estimate of 3.7%. We're going to be speaking to Heineken's Dolf van den Brink on the opening trade, who will be taking us through those results as well. But let's get a broader check of the markets this hour, because, as I say, it's a busy week ahead for you. We have lots of earnings. We have results from 4 of the Magnificent 7, in fact. We also have a slew of economic data and central bank decisions from 7 economies, including the BOJ, the Fed and the BOE. So as we look ahead to the start of the cash trade, we've got futures pointing higher on both sides of the pond. They're set for strong sessions at both sides of the Atlantic, as you can see. On Friday, you had bets on a September Fed cut, reinforced by Friday's economic data, boosting every group on the S&P 500, and that bull market broadening into small caps. So you can see that S&P E-mini futures higher 0.4%. If we flip over to the cross-asset picture now, you've got the 10-year US Treasury yield currently lower 2 basis points at 4.17%. Bond traders ramping up those bets for a more aggressive Fed than it has telegraphed itself. Euro dollar currently at a 108 handle, so pretty steady as we look ahead to the European inflation and GDP numbers this week. The yen at a 153 handle ahead of the BOJ decision, and Brent trading at $81 a barrel, so near a 6-week low here ahead of that OPEC Plus meeting this week. Analysts really divided over whether the group's going to boost supplies next quarter. But let's hone in now on Asian markets. Avril Hong is standing by for us in Singapore. Avril, what's happening where you are?
Yeah, Lizzie, I think investors are really in wait and watch mode. It is a big week, as you say. We got the BOJ, we got the Fed, we got tech earnings, not just from some of the Mag 7s, but Samsung as well in the middle of the week. And then some Chinese PMI set to drop. So a lot that can turn into the way of market drivers, risks ahead. Ahead of all that, we're seeing Asia equities mostly tracking the gains on Wall Street from last Friday as investors bet on those looming rate cuts from the Fed and how this might propel corporate corporate earnings. So a bit of risk appetite, but some caveats here. The Chinese equity is still weak. We are also seeing lower than usual trading volumes that are typical this time of the session. Let's flip the board. A couple of other things that I wanted to highlight in stocks, because as we see the Japanese gauges today doing quite well, underpinning that is what we're seeing on the insurance names, a number of them getting their price targets upgraded by Morgan Stanley MUFG. They see a wealth of potential catalysts. ASI is the outlier today, dropping 13%, the most in about 3 years after surprisingly getting its Alzheimer's drug rejected by EU regulators. And amid all this, the yen, of course, is in focus as traders brace for this potentially hawkish BOJ. We have the likes of JP Morgan saying they see a hike to 0.25%, along with a sizable reduction of bond purchases. The yen erased earlier declines, climbing against most of its G10 peers as well. Flip the board again. Just wanted to talk you through what are some of the levels we're watching on the Japanese yen as we see traders bracing for what's to come in the middle of the week. The dollar yen earlier broke through some of the 100-day moving average levels, and now 200-day moving average. That could be the next level to watch. Lizzie.
All right, Avril Hong in Singapore, we thank you for that look ahead. And as you say, it is a very big week ahead for central banks, not just the Bank of Japan, but we've got the Federal Reserve decision on Wednesday as well, followed by the Bank of England on Thursday. And for a look ahead, we can speak to Garfield Reynolds, who helps lead Bloomberg Markets Live coverage for us. Lovely to have you with me, Garfield. Let's start with the Fed then. We're not expecting a cut from the Fed yet. The expectation is September. But just walk us through the signalling that we could get, both from the eco data and from the Fed speak this week.
Yeah, well, I mean, the eco data has been very clear that the situation has moved markedly towards an environment that that investors think means the Fed should be cutting sooner rather than later. And so we have, as you say, there's nothing priced in for this week, but September is fully priced in for a cut, and then at least one more cut this year, possibly two, is currently priced. And you would think if Jay Powell does talk the sort of dovish talk that's expected, you would have 3 cuts priced in for the year by the time he finishes speaking. So there's a lot at stake here for a meeting where nothing is supposed to actually happen on meeting day. It's all very much going to be about how confident Powell and then other Fed speakers are that they will be able to be sure that inflation is returning to target. It's also going to owe a fair bit as well to what goes on with the labour market data that we get, both running into the Fed and, more importantly, after the Fed actually meets. If we get a weak jobs report in the wake of a Fed meeting where maybe they're not as dovish as investors might have thought, then that would lead traders to go, okay, never mind what the Fed said, they are going to have to act.
OK, so potentially a lot of movement in the pricing around the future path for rates, even if we don't get a cut this week. And let's just talk about the BOE as well, Garfield, because, of course, the expectation is, at the moment, it'll be a coin toss, despite headline inflation being at 2%. Do you reckon that the pound can continue its strength after this decision?
Well, if they cut, the pound could still remain strong if they sound cautious about where the path is from here. In fact, in many ways, the pound might actually end up doing better in the event of a cut than otherwise, because then traders can go, okay, we know what the BOE's done now. We can see that they're going to take baby steps, as it were. So unless you have a BOE decision where the central bank cuts and signals that more cuts are coming rapidly, then especially in an environment where the Fed is moving towards cuts, ECB is moving towards cuts, a lot of others are, the pound could actually end up quite strong unless you get a really definitive turn to a rapid easing from the BOE.
All right, Garfield Reynolds with a preview of those central banks' decisions this week. We thank you. And for more Markets Live coverage, you can head to MLive Go on your Bloomberg terminal. Now, let's get to the geopolitics. Israel is threatening further retaliation after striking Hezbollah targets in Lebanon. It comes after a rocket attack that killed a dozen young people in the Israeli-occupied Golan Heights. Hezbollah has denied responsibility for the attack, but we can get analysis now from Bloomberg's Jumana Basechi in Dubai. Jumana, what's the latest on these strikes?
Yeah, well, the attack in Majd al-Shams in Golan Heights marks a serious escalation on the northern border of Israel. And just to recap what happened, a rocket exploded on a football field on Saturday evening, killing around a dozen youngsters between the age of 10 and 20, wounding more than 40 others. The IDF were quick to say that Hezbollah were behind the rocket that was fired. They pointed to a specific type of rocket that was used that only could have originated from the Lebanon militia, that is Hezbollah. Hezbollah denied responsibility for the attack, but then we also got comments from the U.S. Secretary of State Antony Blinken saying every indication that this missile has been fired by Hezbollah. It also meant that Netanyahu, who was in the U.S. last week visiting many of the leaders and delivering his address to Congress, had to cut short his speech and flew back to Israel to consider their options of how to retaliate. Now, throughout the course of the day on Sunday, we did see a very targeted retaliation from Israel hitting specific Hezbollah infrastructure. There is, of course, a lot of concern that this may actually be the catalyst for this to grow into a full-blown war. There has been almost daily exchange of crossfire between the southern parts of Lebanon from Hezbollah into the northern parts of Israel since October 7, but there was always a concern that this might actually blow out into something bigger should there be a miscalculation. Many are saying that Saturday's attack was that miscalculation, and the next 24 to 48 hours are going to be crucial to see how both sides respond. The Lebanon Prime Minister is calling for de-escalation of tensions, saying that there needs to be a ceasefire on the southern border of Lebanon and an implementation of that Resolution 1701 that was put in place after the 2006 war. But again, tension is high, and people are very concerned about what could happen in the next 24 hours or so.
Well, yeah, how are those ceasefire talks progressing? I note that you've got Israel's parliament about to take a 3-month break.
Yes, so in parallel to this, it's worth pointing out that the ceasefire discussions around Gaza are still continuing in Rome. The Mossad director flew over to Rome on Sunday, meeting with the CIA director William Burns and the Qatari Prime Minister alongside the Egyptian intelligence chief. And as we know, both Qatar and Egypt have been crucial to mediating the talks that are ongoing between Israel and Hamas. The Prime Minister's office, the Israeli Prime Minister, put out a statement saying in the coming days, negotiations over the main issues will continue. And even when the Prime Minister met with President Biden last week in the U.S., there seemed to be some positive signals from that meeting that the ceasefire discussions were actually moving in the right direction, at least for phase one, which would allow the secure release of hostages and the exchange of prisoners that are held within Israel as well. But how the negotiations proceed from phase one to phase two, which would entail a permanent ceasefire, is one of the stumbling blocks here, because as we know, Lizzie, Israel has said time and time again that they're not going to stop this war until they see a full demilitarization and de-radicalization of the Gaza Strip. And whether or not the conditions right now warrant for them to move on to the phase two part of those negotiations is a big question mark. But there's a lot of pressure on Netanyahu internally to secure the exchange of hostages, which is maybe why we might see phase one implemented with, again, more discussions to take place about moving on to a permanent ceasefire later on.
OK, an incredibly difficult diplomatic dance. Bloomberg's Jumana Basechi, we thank you for bringing us the details. That's our anchor of the Horizons programme, Jumana Basechi. You can get a roundup of the stories that you need to know to get your day going in today's edition of Daybreak. Today, they lead on markets, kicking off higher as we look ahead to the Bank of Japan decision and the Federal Reserve decision. They also have President Nicolas Maduro winning Venezuela's presidential election. We'll have more on that that later in the programme. And they have the UK Chancellor Rachel Reeves pledging to fix economic foundations. A preview of the speech she's set to give at 3:30 p.m. London time, where she's also set to announce the date of the next budget. But coming up on the programme, why some new iPhones may be shipped without the highly anticipated Apple Intelligence features. We'll bring you the latest on possible delays to Apple's AI rollout next. This is Bloomberg.
Wednesday, the Fed decides.
Who said summers were quiet? I don't remember the last quiet summer.
We're talking about the data not being as accurate during this time of year, an election that's haywire.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
Is the answer here, Jeff, that everything is just plain solid?
It's pretty solid, Tom.
At some point, we got to call it a soft landing.
Tune in to Bloomberg Surveillance, the Fed decides, starting at 1:30 p.m. Eastern.
Welcome back to Bloomberg Daybreak Europe. It's 6:17 a.m. in London, and we're looking at futures pointing higher in both the US and Europe as we gear up for another big week of earnings, especially for the Magnificent Seven. And we can hone in on some tech news now. Bloomberg has learned that Apple's new AI features will come later than expected, actually missing the initial launch of its upcoming iPhone and iPad software overhauls. And for more details, I'm joined by Bloomberg's Tom McKenzie. Tom, what do we know about these delays?
So this is going to be a bit of a disappointment to those who have been building up to this crucial announcement from Apple, expected in September in terms of the software updates for iOS 18 and iPad OS as well. There's been so much expectation and anticipation around Apple's AI devices and the way that they're integrating AI into their devices because their competitors, Samsung and others, are already doing this. So what we know is that they're actually going to delay the full rollout until about October. In fact, the full rollout won't happen until the first half of next year. The partial rollout, I should say, is going to come in October. It had been expected in September, and this is largely down to the fact that they want to ensure that they iron out any bugs in these systems before they release them to the public. They've had to take their time in terms of integrating AI into their hardware. They want to ensure that it is shipped and ready to go. And by the way, just as a reminder, in terms of what these features involve, things like an upgrade to Siri, things like integrating ChatGPT into some of their software services as well, and things like note summaries. So that is part of Apple Intelligence. But yes, in terms of the software updates that come through in September, those will not include these AI features. That will be delayed until October, and it won't even be the full suite of them.
So consumers will have to wait, but software developers might get to test out Apple Intelligence as soon as this week?
As soon as this week. And that's relatively rare for Apple. So the beta versions of this software will be tested and given out to their crucial software developers. So this army of developers that makes the applications for Apple's hardware, they will be getting access to this as soon as this week. So that's really important in terms of their ability to ensure that this is ready to go. Again, working through the bugs, working through the kinks in the system. This is complicated stuff. Apple hasn't done this before to this kind of scale, so they need their software developers to be getting hold of this before they ship them. And again, in terms of timeframes, initial parts of it will come through in October, but the full suite, including some of the most significant changes to Siri, for example, will not be coming through until the first half of next year. So we'll have to see how the stock reacts to this and whether or not there's disappointment. But certainly, when Apple finally came through and announced its AI plan, there was a lot of hope, a lot of expectation, and the stock lifted on the back of that.
Yeah, that's my next question. What's going to happen to the stock off the back of this? You say it's kind of rare to bring in external software developers. I'm not sure how often we see delays like this. Do you expect the stock to get knocked?
Well, first of all, there was the anticipation and the fact there was a lot of concern. There was a lot of hand-wringing, and the stock was dragged and moved lower as people were concerned about the fact that they were delaying what their plans were around AI. When they finally got to the stage and announced it earlier this year, back in June, that really lifted optimism. Look, this is a company with a touch point across hundreds of millions of consumers around the world. They integrate their AI into their hardware, into their iPhones, into their iPad, to get them into the hands of hundreds of millions of people globally, and the hope is then that will drive sales. Interestingly, the AI software upgrades will only be available for the most high-end iPhone 15s and then the iPhone 16s, which launch in September, because they want to ensure that this is a catalyst for consumers to go out and buy more phones. They're looking to ship 90 million additional iPhones globally by the end of this year.
Well, that's a big number. I mean, teasing us there, Tom, with all of the latest features that we can get from Apple Intelligence, but we're going to have to wait. Bloomberg's Tom McKenzie with all the details. We thank you. Coming up, big tech earnings, as I say, going to ramp up this week. Will results turn around sentiment, or are they going to deepen the rotation trade? We'll bring you a preview later in the show. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now time for a look at some of the other stories we're watching for you this morning. Venezuela's electoral authority, which is controlled by the ruling regime, says that Nicolas Maduro has been re-elected as president for another 6-year term. But speaking in the last few minutes, the opposition claim that their candidate took 70% of the vote in tabulations. The US, for its part, says that it has serious concerns the result does not reflect the will of the Venezuelan people. Elsewhere, Italian Prime Minister Giorgia Meloni has vowed to relaunch bilateral cooperation with China on her first visit to Beijing since snubbing the flagship Belt and Road Initiative last year. The two countries signed a 3-year plan to strengthen ties, with Meloni expected to visit and meet President Xi Jinping during that trip. Elsewhere, Republican presidential candidate Donald Trump says that the US needs to double its electricity production to dominate the AI and crypto sectors. The former US president gave a keynote address at the Bitcoin 2024 conference in Nashville, saying that he wants America to lead the way. The speech capped an about-face of Trump's stance, on the asset class, which he labelled a crime-riddled scam while he was in office.
This afternoon, I'm laying out my plan to ensure that the United States will be the crypto capital of the planet and the Bitcoin superpower of the world, and we'll get it done.
Vice President Kamala Harris has raised $200 million in her first week as 2024 presidential contender, highlighting a surge of enthusiasm among Democrats. Meanwhile, Bloomberg has learned that she's zeroing in on a group of potential running mates. Sources tell us that the shortlist includes Arizona Senator Mark Kelly, Pennsylvania Governor Josh Shapiro, and Minnesota Governor Tim Walz. So those are some of our top stories this morning from around the world. We are looking at futures pointing higher in the US, higher 0.5% nearly for S&P E-minis, 0.5% as well for Euro Stoxx 50 futures. And we are going to be looking ahead here in the UK towards a big speech from the UK Chancellor Rachel Reeves at 3:30 p.m. London time. She's going to unveil a budget date, but she's also going to be telling us about what she thinks is the real state of the UK fiscal situation. Did we know about all this before the election? That's the debate, and lots of criticism from think tanks like the Institute for Fiscal Studies. So we can debate all of this with former Shadow Minister Jonathan Ashworth coming up next. He is the director of Labour Together, a left-wing think tank. Plenty to discuss with him on the programme. That's coming up next. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda. Asian shares jump at the start of a big week for big tech earnings, with investors also watching for rate decisions from the Fed, the BOJ and the Bank of England. Meanwhile, Israel attacks Hezbollah targets and threatens more retaliation for a rocket strike over the weekend, while signalling openness to a truce with Hamas in Gaza. Plus, the UK Chancellor promises to fix the foundations of the British economy. We'll preview a major speech from Chancellor Rachel Reeves. Well, good morning. Welcome to a very, very busy week, not just for earnings, but for central banks and economic data as well. We've got over $27 trillion of market cap reporting results this week. $15 trillion is the S&P 500 alone, and that includes Meta, Apple, Amazon and Microsoft. So plenty to watch. We've got futures pointing higher on both sides of the pond this morning as we look towards the start of the cash trade. And meanwhile, if we flip over to the cross-asset picture, you've got the 10-year US Treasury yield lower 2 basis points at 4.17%. Bond traders ramping up bets for a more aggressive Fed than it has telegraphed. Euro-dollar currently at 108 handle, so pretty steady as we get towards this inflation and GDP data out of Europe this week. The yen at a 153 handle ahead of the BOJ decision, and Brent trading near a 6-week low ahead of that OPEC Plus meeting this week. $81 a barrel is where we are currently. But let's hone in on the UK now. As I say, we've got this big speech from Rachel Reeves later, the UK Chancellor. She's expected to accuse the previous administration, led by Rishi Sunak, of overseeing a near £20 billion shortfall in the government's finances. And for more, we're joined now by the Chief Executive of think tank Labour Together, who's also a former Labour MP, former Shadow Work and Pensions Secretary, Jonathan Ashworth. Morning, Jonathan. Good to have you with me. I wonder whether this audit's really necessary when you've had the Office for Budget Responsibility sums wide open to the public for all to see since way before the election.
Well, it's certainly true that what the OBR does is provide government publicly with projections for tax revenues, projections for growth. But what it doesn't do, and what we don't know outside of government, is the changing trajectory of the spending profiles of particular projects, of commitments that are coming into ministers and have stayed on their desks, if you like, gathering dust. And what Rachel Reeves has done, and her other colleagues in the cabinet, is they've done an audit of all the commitments across Whitehall. They've asked ministers to look under every carpet, to look to the back of every cupboard. And I think what you'll see today is a full warts and all analysis of the spending commitments that have been piling up in the in trays, not being dealt with. We've heard, for example, or we suspect there'll be details about public sector pay deals. We know that the backlog in the asylum system and the hotel projections, the hotel cost projections, have been astronomical. So she is going to present all of these commitments that have been building up and outline a plan for how she now has to grip this situation.
But our viewers have seen chancellors past do this many times before. It's a classic play to tell us what's under the carpet. Is it actually just a spin exercise to justify tax cuts that the Chancellor and the Prime Minister knew were too unpalatable to mention before the election?
Well, remember, the Chancellor and the Prime Minister in the election
rises, campaign... I should say, Jonathan.
Yes, yeah, indeed. The Chancellor and the Prime Minister election campaign made it very clear there'd be no tax increases in national insurance, income tax and VAT. I don't anticipate any change from that. That was very clear in the manifesto. But I think it's entirely understandable that an incoming government will want to do a full audit of what it is they have inherited. You say this is what all governments do. Well, yeah, but it makes sense, doesn't it? If you take over running a government department, you want to really, really understand all the issues and all the problems that you've now got to deal with. And look, perhaps ought not to be like this, but maybe it's human nature to a certain extent. If you're a government and you're expecting to lose, or you don't think you're going to do well in an upcoming election, it's not surprising that you put off the difficult decisions. But somebody's got to pick up the pieces of the delay in those difficult decisions, and that's what we're going to be hearing today.
Well, you rule out raises in the main rates of tax, but can you categorically rule out increases in capital gains tax and inheritance tax?
Well, I mean, I have the advantage now, not an advantage I chose, but the electorate chose for me of not being a frontline politician. So it's not for me. I don't need to answer those questions anymore in the way I would usually have to duck and dive. Look, that's a matter for the Chancellor. She's going to present a true picture of where she thinks the public finances are today. She's going to bring out the dead, if you like, and bring out all the problems. And then I imagine she'll get pressed on that today. But of course, we'll have a budget in the autumn where we will see what the government's position is on how she's going to repair public finances going forward.
Well, what you can see from your perspective is if Britain is so broken and so broke, as the Chancellor is going to tell us, why would you want to come and invest here?
Well, because I think you've also got with this government a laser-like focus on economic growth. So as well as what we're hearing today, tomorrow you're going to hear reforms from Angela Rayner, she's the Deputy Prime Minister, to the planning regime. And I think investors know that planning is a problem in this country, that we do not build the infrastructure we need, we do not build the houses we need. I mean, not every investor is necessarily interested in infrastructure capital spend, obviously, but I think it's an important message to the business community across the world that Britain is open for business, that we're prepared to take very, very tough decisions. And we know that in this country, one of the reasons we don't build is because it's not easy to get local communities to agree to accept new infrastructure projects or new planning projects. Well, we're going to change the planning regime and we are going to build in this country. So I think that is one example. It's quite symbolic in that way of how we are open for business, and investors should be looking at the UK afresh.
Investors, of course, also watching the Bank of England decision on Thursday. I wonder if you worry that if they don't get on and cut rates now, if inflation rises again later in the year, that they could miss the window and leave working families stuck with these higher mortgage costs.
Well, I mean, interest rates are obviously a matter for the Bank of England. They're no longer, or haven't been a matter for politicians for 20-odd years now, quite rightly so. However, the way in which you conduct your fiscal policy inevitably has an impact on monetary policy. And I think the Bank of England, I would suspect the Bank of England would feel reassured that there is a Chancellor today making announcements and is prepared to get a grip of the state of the public finances and wants to maintain or inject discipline in the public finances. Look, the Bank of England will have to take into account all kinds of things when it makes its decisions on interest rates, obviously. But a Chancellor being on top of the public finances is an important one.
All right, Jonathan Ashworth, Chief Executive of Labour Together. Lovely to have you with me on the programme as we look ahead to that big speech from the Chancellor, Rachel Reeves, and that Bank of England decision later this week on Thursday. On a knife edge when it comes to pricing from traders, whether they're going to cut rates this week. It's also a big week, of course, for big tech earnings, with the majority of the Magnificent Seven reporting. We're going to kick off with Microsoft tomorrow, followed by Meta on Wednesday. And on Thursday, we'll get numbers from Apple and Amazon, as well as Intel. So we can get more now from Tim Craighead, who is Director of Equity Research at Bloomberg Intelligence. Tim, can we expect a turnaround in sentiment or more of a sell-off from big tech this week?
Yeah, it's $64,000 question, so to speak. I'd argue that the tech sell-off has been more of a rotation in advance of expected, Fed easing than it has been a worry about tech earnings per se. Look at what's moved in the market over the course of the last a couple of weeks, and it's been things like home builders and property companies, and tech's been on the other end of that. If you look at earnings coming up, maybe there's a bit of an asymmetric risk here. If earnings are met, it doesn't really change the story. If earnings disappoint, then valuations are high, and it's a sort of take-no-prisoner market that we're in currently. Those companies that are reporting, I think, all have individual items that are really interesting to look at. You think about Microsoft, and it's got really high expectations, something like 14% sales growth expected for next year. That creates a really high bar for them to hit. Even though we think we're going to hear good things about AI, the overall tech spending cycle is a little on the soft side.
Yeah.
Where Amazon has got really strong e-commerce sales. They've signed new contracts with sports like NBA. And we think that AWS, as their cloud service, continues to expand quite rapidly. So it'll be really interesting seeing how those play across the Magnificent Seven.
Yeah, it's what I like to call the Shania Twain market. Nothing impresses these traders much. So let's just talk about what's happened so far. What's been your scorecard for earnings season?
Yeah, it's actually been a pretty good season so far here in Europe specifically. We've got about half of the market cap that's reported. And we've got roughly half of the companies that have beat expectation, 25-30% that have missed. It's been a little stronger on earnings, a little bit weaker on sales. There's been a little bit of margin compression after several quarters of continued solid expansion. And if we look at what's worked, it's been a variety of industry groups. What's stuck out is what's not. It's energy and autos. You look at the autos, and they have been horrendous from the standpoint of profit growth. And a little bit company specifics, but China is certainly a key part of that for the European auto industry. So we'll be continuing to watch there.
Yeah, also a key theme for some of those reporting earnings in Europe this morning is China. We've had Philips results, Heineken results that we broke at the top of the hour, and we're going to be speaking to the leaders of both of those companies later in programming. But Tim Craighead, Director of Equity Research at Bloomberg Intelligence, always good to get your analysis. It is, as I say, a very, very busy week. It's a busy day, in fact. Today we've got the UK Chancellor Rachel Reeves speaking. There she is on her recent visit to Bloomberg, and she's going to be unveiling just how bad the UK fiscal picture is as she announces a date for the UK budget later this year, her first as Labour Chancellor. Tomorrow, we're also going to get the latest euro area data. This should gear up the ECB for its next rate decision, so keep an eye on euro dollar. And on Wednesday, of course, we have the Fed rate decision. No cut expected yet, but all ears tuned into the Fed speak as they set up expectations for potentially a cut in September and more perhaps later in the year. But coming up in the programme, we're going to speak to the Philips CEO Roy Jakobs after the company posted a gain in orders for the first time in 8 quarters. We'll ask him the latest on the sleep apnea machines as well. So all of that next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Philips has reported an increased order intake for the first time in 8 quarters this morning. This after issues related to the medical equipment maker's faulty sleep apnea machines receded. And I'm joined now by Philips CEO Roy Jakobs for analysis of these results. Good to have you with me, Roy. You must be pretty pleased with this. A big beat on EBITDA, an order intake gaining for the first time in 8 quarters. What's driven it?
Yeah, I'm very encouraged indeed by the set of results we presented. The strong order intake actually was from a very strong North American performance, but also we see growth in other pockets of the world. So actually we see that the strength in our innovations really rallied, orders coming in from across monitoring, imaging, interventional, and also very strong enterprise informatics. So we see that momentum in healthcare growing, and that's very encouraging. Secondly, we saw a very strong profit improvement, as well as cash improvement with a solid sales performance. So overall, we did what we promised that we would do, and that also gives us the confidence for reiterating our full-year outlook for 2024.
OK, is that consistent with what you saw in your China business in the second quarter? Last quarter, you said that anti-corruption measures there and the subdued consumer demand were actually weighing on your company.
True. I think China, if you look at China, of course, they're going through a change from an economy perspective. But fundamentally, the market is strong. We're there for 100 years. We have localized our portfolio. 90% is in China for China. And we also see active funnel build up. But at the same time, indeed, anti-corruption is weighing on the market. It actually is expanding the order lead times, as well as the stimulus package that actually was announced is coming into play, but yet not materializing. So we expect an improving China in the second half. But actually, if you look at the global picture, we see that the world as such, and therefore the contribution from the other places is also very strong. And that overall makes our performance solid. And actually, we're happy with where we are in the second quarter, first half, and the full year outlook.
And on that global theme, are you still struggling with supply chain issues? What are you doing to stabilise supply?
Yeah, supply is a very important theme. When I launched the plan for Philips, we said that the first priority, patient safety and quality, second, supply chain reliability. We have been working ever since. First started to stabilize the components so that actually we could finalize the products that actually saw in great growth conversion last year. Now we're also further regionalizing our supply chains, and that actually helps us to cater to becoming more agile and also more localized in providing the right supplies for North America, for Europe, Asia, and for China. And as a result, we also were very happy to see that we have the end of supply chain shortages and the lead times are back on market levels. And that also helps us to get that order intake further up and further growing. And that's also what gives us confidence for the second half of the year in terms of order growth.
And we've got to talk about the sleep apnea devices. The FDA wants you to conduct further toxicology tests. When can we expect the results?
So as you know, we have done testing. Actually, that testing so far has shown that no appreciable harm was done. We're also further collaborating with the FDA. We are conducting further testing. Now, that's still in progress. We will come forward when we have the results. We still look confidently also to the finalization of those set of results. We believe it will be further strengthening the set of results that we have had. But it's too early currently to talk about that. We will have to wait until these results are finalized. I think the other part on the sleep and respiratory care business, which is important, is that we also started to see the growth outside of the US. And we see sleep and respiratory care coming back into profitability. So actually, next to that, we keep focusing on driving the consent decree, the settlement that we made, we also now see the business coming back to contribute to Philips in a positive manner.
But in the US, when do you expect to be able to sell new respiratory care medical devices there?
There will be, so on the sleep and respiratory care, we are still selling the patient interfaces in the US. Actually, they're also doing well. Also some of the respiratory care devices. But the ones that are under the consent decree, that we have to still wait to get back into the US markets. Too early to tell when that exactly will be, as we actually just started to execute on the consent decree this quarter. We said earlier this will take a bit of time, but we are fully focused on the totality of Philips to bring that back into growth, bring that into stronger profitability and stronger cash generation. And I think that's what we showed this quarter. That's also what you see, I think, in growing momentum around the total Philips portfolio and the innovations we can deliver. We had big deals that were being closed in North America, in Europe. We're working on significant collaborations also in Asia. So we see globally that there is really demand for the innovations and that we are working with customers to fulfill their needs for better and more care.
Well, yeah, it's true. Investors really are regaining confidence in Philips. You've had your two biggest investors, Exor and Artisan Partners, raising their stake in the company just last month. I wonder if they told you why they bought more shares and whether you expect them to buy even more stake.
Yeah, I think we were indeed very encouraged to see that. Of course, we saw Exor coming into the stock with 15% earlier as a very strong signal of confidence. Now we see them upping their stake to 17.5%, even after the settlement. They have been looking at our plan at great depth. So they know what we're executing against. When I launched a 3-year plan, they really looked into what we're doing with patient safety, what we're doing with supply chain, what we're doing with simplification of the organization. Most importantly, what are the assets that we're having to support healthcare in the hospital and in the home? And they're very excited about the value that we can still untap for Philips, but also with customers. And that's actually what has been driving further investment, we believe. And that's also what we see when we engage with other investors, because I think after the settlement that we had in the first quarter, you really see that the discussion is focusing on the business, focusing on the innovation potential that we have to really support kind of a big sector in need, healthcare, which just doesn't have enough doctors and nurses to serve all these patients, and they need innovation. And as a technology company with strong hard and software and AI, we can really make a meaningful difference. And that's still a lot of opportunity to come and to unlock for us. We stay diligent in executing on our plan. We have made the progress so far. We will keep focusing on the next steps, and doing so step by step, build back Philips to where it belongs.
Well, we'll see how traders like it at the open. Philips CEO Roy Jakobs, always a pleasure to have you with us on the programme. Thanks for joining from Amsterdam. I do note those shares are up 16% year to date, but they're still down 45% since Philips recalled those sleep apnea devices in 2021. Can the stock go back to its glory days? We shall see in just over an hour's time. But we've got plenty more coming up on the programme, so stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. It's a busy week ahead, not just for earnings and central banks, but also in the politics. Take a look at what's happened over the weekend. You can see the Trump polling average there in the red and the Democrats in the blue. Of course, Kamala Harris taking over as the presumptive nominee for the Democrats before she is confirmed. And look at that poll gap narrowing over the weekend. We continue to mind that, but the bump from the assassination attempt really does appear to have been erased. So we'll mind the politics. As I say, we'll also mind the central banks this week. We've got a Fed decision, a BOJ decision and a BOE decision. Let's take a look at the Bank of Japan. So markets do see more hikes ahead from the BOJ. You can see the pricing here. They're expecting currently this week potentially to have also action on bond buying. But if we take a look over to the Federal Reserve, you can see we are not expecting any action this week. We're just expecting the speech to gear us up for a September rate cut. Markets nearly fully pricing in that September cut, but nothing this week. The action is likely potentially to come from the Bank of England. You've got economists saying that it could be a very, very tight vote on the Monetary Policy Committee. But in terms of the decision this week, really on a knife edge in terms of traders' expectations. Be interesting to see how Claire Lombardelli votes in her first time voting as a Monetary Policy Committee member. That's on Thursday. But today, we've got plenty more to bring you on Bloomberg. We're going to be speaking to Heineken's CEO, Dolf van den Brink. That's coming up in the next hour at 7:45 a.m. And that does it for Bloomberg Daybreak Europe. The opening trade is coming up for you next. So stay with us. This is Bloomberg.